Double tops and double bottom patterns are some of the most important reversal patterns you need in order for you to trade successfully. Okay, so we have double top, and double bottom. So in this case, we are going to start with the double tops. Who will tell me when a double top formed? In a downtrend or in an uptrend? They're formed in an uptrend. Okay, so let's say that the previous trend was an uptrend and it is forming higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, and it reaches at a certain point there. On reaching this point, this is a point that most of the time the price is unable to break through. Okay, so it reaches at this level. Okay, this level, we'll call it a resistance level. Okay, the price on reaching here, it will bounce here once and maybe twice. It will tend to take a deep dive, reversing on its previous trend. Okay, it gains some momentum and comes and tries to break again that resistance level. Okay, it bounces off here and then comes back to this line that is formed here, and this line, we'll call it a neckline. A neckline. This one is a resistance level. Okay, this was the previous trend. It was an up trend. Okay, if the price reaches this resistance level and it is rejected, this is the first top. Okay, when it comes and tests this neckline, moves back to this resistance level to retest it once again, it forms the second top. Okay, so the first top and the second top are called the double top patterns. Okay, in most cases, we expect the price to come, break this neckline and form a breakout. And this whole pattern is called a reversal. This is a reversal pattern. Okay, so the price is expected to break this neckline and change direction from an uptrend to a downtrend. That is why we say that a double top is a reversal pattern. So a double top is a reversal pattern that is formed after there is an extended first move. Okay, the first top is formed, the second top is formed when the price will reach and hit this resistance level, okay, which seems not to be breaking. The price comes here, tests this neckline, breaks it out and goes lower, forming higher lows and higher lows. All right, so after hitting this level, the price will bounce off slightly, but then it will return to test this level again. Okay, hence formation of the double top pattern. Okay, so in this illustration, you can see that the two peaks were formed after a very strong move up. You will notice that the second top was not able to break the high of the first top. Okay, so this is a strong sign that a reversal is going to occur after price breaks out through this neckline. Okay, and this is telling us that the buy pressure was evidently on the previous trend is just coming to an end. Okay, so with double tops, we would place our entry here. Okay, just some pips here. We will place our entry there. Most often, we will place a sell stop order. Okay, sell stop order, so that when this breakout comes into effect, it will trigger us in the trade and we will continue with the reversal. Okay, because we are anticipating the reversal of this uptrend to a downtrend. That is simply the double top pattern. It happens when an uptrend changes to a downtrend. It involves a resistance level. It has two tops, the first top and the second top. The second top does not, the high of the second top does not exceed the high of the first top. We have a neckline here, and if the price manages to break that neckline to the downside, we say that we are having a breakout and a reversal of that trend. Okay, so if there is no any further question, we are going to look at the double bottom. The double bottom is the exact opposite of the double top. Okay, so in the case of the double bottom, we will have price on a downtrend. Okay, so we will rub this illustration and then discuss the double bottom. Okay, the double bottom happens where there is a bullish reversal. So let us discuss the double bottom. As I have rightly said, so that a double bottom will happen in a case of a downtrend. Okay, let's say that the price was in a downtrend. Okay, this is our price, a downtrend. On reaching this level, we find a very strong support level. Okay, find a very strong support level. Okay, we'll name this a support level. What tends to happen in this case is that the price is likely to bounce off through this level, retrace a bit into our direction, okay, then consolidate a bit, come again to retest this level for the second time, and then bounces off to retest the neckline. And if this is the neckline, so this is the neckline. Remember our previous trend. This was our previous trend, which was a down trend. If we expect for a double bottom to be formed, we expect the price to come, break out of this level, break out of this level, which is the neckline, after forming the first bottom and after forming the second bottom. Okay, good. So we have our resistance level here. It has been tested twice to form the double bottom. The price, having gained enough bullish momentum, will come, hit the neckline. If the volume matches the price action, we'll have a breakout here and the price will tend to go up. Okay, so as I have rightly said that double bottoms are also reversal formations. By this time, we are looking to go long instead of short. Okay, we are looking to go long, meaning we are looking for buy position. So for you to take advantage of this reversal pattern, you place some buy stop orders here. What this means is that when the price will come to that order, it will trigger you into that trade, and you are in a position to ride along with that trade to create higher highs and higher lows. Okay, so as we have rightly said, that these formations occur after extended downtrends when two valley or two bottoms are formed. You can see from this illustration that the previous downtrend, the price forms these two bottoms, valleys, because it was not able to break through this support level. Okay, rightly so, you will notice that the second bottom was not able to significantly break, okay, through the low of the first bottom. Okay, you can see that this is a sign that the selling pressure that was evident from the previous trend is about to be finished and that a reversal is about to occur. Okay, so in this situation, we would place an entry order here, okay, above the neckline. All right, so that when the price will hit it, it will make us enter into this position, and we will start forming higher highs and higher lows, and hence change of the trend from a downtrend to an uptrend. Okay, good. So we have seen that the double bottom forms a W pattern. The double bottom forms a W pattern, okay, while the double top forms an M pattern. Okay, so in your charts you will come across the M pattern and the W pattern. All these patterns are reversal patterns. Okay, so while the double top with its distinctive M shape, this indicates a bearish reversal, as we had seen. So this indicates a bearish reversal. The W pattern, because the price will start going higher and higher, it indicates a bullish reversal. Okay, good. So as easy as this sounds and looks, there are limitations of using the M pattern and the W pattern, the double top and the double bottom. So you see, the double top and bottoms, if they are not supported by resistance and support levels, they may tend to provide false signals. Okay, so it is very important for you to make sure that your double top and double bottom patterns, they form along the support and resistance levels. Okay, so a double top, we said that this is a bearish reversal signal. But when this same double top is not confirmed with a resistant level, remember the resistant level, a double bottom support level, it may give you a false signal. Similarly, a double bottom candle pattern or the W pattern is an extremely bullish reversal signal. But when it is not supported by a strong support level, it will tend to give you false signal most of the time. Okay, so we have just basically looked at two patterns, the M pattern and the W pattern. We have said that all of them are reversal patterns. Okay, one is a bearish reversal and another one is a bullish reversal, both giving signals of price changing trend, either from an uptrend to a downtrend or a downtrend to an uptrend. Okay, good. Any question? because in the next class we are going to look at head and shoulder patterns and the reversal head and shoulder patterns. Okay, remember, we do not use these patterns in isolation. We use them with other technical analysis like the support and resistance levels, supply and demand levels, order blocks, fair value gaps, to come up with decisions that will help us to trade successfully and consistently, getting money out of those markets. Okay, so next let us look at the head and shoulder patterns. All right,